Hello everyone, welcome to the Global Adoption of Institutional Assets. My name's Sylvia, I'm the research lead at Bullish Exchange. Joining me today we have Rhee from Vega Digital Prime, and we've got Raagulan Pathy from Circle, as well as Maneul Nordeste from Fidelity Digital Assets. A warm welcome to all our panels today. So crypto's had quite a rough year, and the US SEC crackdown on the industry, as well as what's coming out with altcoin regulation, deeming it as a security. CVI, which is the crypto volatility index, is at all-time lows, 35 to 40, when I last checked. I think, has this stifled institutional adoption in the industry, or what are your thoughts about this landscape? Maybe Maneul?
Yeah, I can start. I think there's kind of two answers really to that question, right? I think there's the sort of long-term adoption trends, and we actually have data around that kind of thing, because obviously we spend a lot of time and effort and capital in this business, and so we want to constantly be testing our assumptions. So we have this study that we release every year since 2018, where we survey over 1,000 investors, institutional investors across the world, all the way from high net worth professional investors all the way to corporates and pensions and that kind of thing. And so the data that we get from that survey, even in 2022, which was very clearly a bear market type of year, was very encouraging. So like Europe and Asia in particular, the current rate of adoption amongst those investors was around like the high 60s, so I think 67, 68%, which is very encouraging. Obviously, the size of the allocations might be small, but it means that people have done their research, they've decided to make an allocation, however small that is. But more interesting even is we ask people, do you have an intention to allocate to digital assets in the future? And then that number goes up to 80% on a global level. And so we're pretty encouraged by that. The second part of the answer, though, is in places like the US, where there was perhaps the shock of FTX was perhaps more deeply felt, there's clearly been a little bit of, I think a slowdown in some of those adoption numbers. And so I think there's, again, kind of two stories. One is more short-term, and we think we have a lot of signs to believe that institutions are still kind of getting ready for when this bear market subsides. Yeah. And then there's another story that is very, very bullish in the kind of 3-5 year term. That sounds encouraging.
So the keynote to wrap up from there is institutions are coming, right? Raagulan, do you have any insights?
I mean, I feel like it's pretty natural during any bear market that you see less interest from the public, but as anyone knows, not just in crypto, but in any markets, as soon as that flips, then everyone comes rushing back in. The reality is that most people who have entered the crypto space have some entry in it, whether it's an account with an exchange, whether it's a crypto wallet, or so forth, and maybe not active, but are ready to be active. I've also generally seen in speaking to banks and others that people are preparing to adopt crypto. And I think really the major item there is that perhaps in one part of the world there has been regulatory challenges. But in another part of the world, especially here in Asia, we're seeing very positive developments. Singapore continues to develop its framework really well. Hong Kong has started retail trading for limited assets since June. Japan is making very, very good progress, including with their stablecoin legislation. So we're seeing lots of very, very positive moves, also in Europe and other places, which is allowing the more traditional institutional money to come in. And I don't necessarily think that the regulatory environment in the US will stay negative forever. In fact, I think we're seeing signs that it's turning around as well. So I don't necessarily share the view that institutional are going against crypto. I think if anything, it's just happening in the right way, and the events of the peak of the previous bull market is setting up the stage for the next bull market to be done in the right way with the right actors, let's say.
Thank you. Thanks for that. And John, do you have any insight as well?
Yeah, I think big picture-wise, the institutional adoption of crypto is ongoing as we speak, right? I mean, it all happened or started in 2020 when public companies, asset management companies, and even endowments and pension funds started getting into it. Now, last year, because of the scandals and all the mishaps, took a little bit of a slowdown. But what we're estimating is that going forward, it's going to be quite a meaningful part of the overall crypto market. It's estimated that as of 2022, there was $127 billion worth of institutional trading activity. And in the space I'm in, which is crypto prime brokerage, that number was very, very small. It's only $2 billion. And that's estimated to grow to about 10 billion by 2024 year end. So if you look at just Coinbase as a rough measure, 2021, I think their institutional business only 21% of their overall revenue, but it's gotten to close to 40%. So it's a very meaningful business.
Yeah, I agree. Thank you for that, John. The next question, I think, Manuel, how do you think the next generation of investors, like your Gen Z and your millennials, are going to impact institutional strategies going forward?
Yeah, so I think that's really like, from a secular trend standpoint, that's really the driving story, right? Like that's really the story behind crypto, behind Web3 and the metaverse. I always like do this metaphor of like, I probably bought CDs a little bit too long, right? Until I realized that music has value regardless of the medium that it's distributed it on. And I think that that's kind of the realization that younger generations don't have to come to because they were brought up in a digital world. And I think, COVID really accelerated that because it moved, particularly the sort of the younger generation has moved a lot more of their life into digital terms. And so you need the sort of financial rails that are going to power that economy, which is up and coming. And that's, you can't really fight demographics, right? It's a silly idea. And so I think that's really sort of an undercurrent that underpins this industry that is very hard to stop, which is why, again, I go back to my previous comment of I think maybe this is a brief slowdown, but if you look 10 years ahead, I think it's more or less inevitable that institutions are going to have to cater for this younger generation, therefore they're going to have strategies around crypto and Web3.
Yeah, definitely. I think adopting to the differing landscape and changes in which millennials and Gen Z view like institutional or financial products as well is going to be huge, and missing out on that market for institutions is like a no-go basically. And Raagulan, in Circle's kind of product innovation, USDC's a prime stable coin that we've seen proliferate around headlines. Is there any other kind of digital innovations that Circle is coming up with that you can maybe give us some insight to?
Sure. I mean, when we look at Circle, we think of ourselves as an infrastructure company first, in many ways. So USDC is really a medium of payment that's global, that is base infrastructure for anyone in crypto or increasingly Web2 companies to be able to move money around the world. But also, we're supporting this effort with our Web3 services, which essentially, you can imagine how AWS created cloud and democratized the ability for people to build applications very easily. We want to do the same thing for Web3, so people can build applications really, really simply without all the complexity of Web3 today. Our first product is programmable wallets, so traditional Web2 digital companies can embed a wallet within their application, essentially Web3 enable it. But I would just sort of add to what you said about the young generation. If you think about like the generation today, someone who's on TikTok, which I'm unfortunately not on too much, but they don't have. You could say like half their friend base is who they go to school with, and half their friend base is all over the world, natively, right? And so the concept of having like lots of countries and lots of currencies doesn't necessarily make sense to them. they need a form of being able to transact value, and USDC is definitely, that's really what we're trying to do, come up with a common currency for the world, but also just crypto and Web3 in general. You know, I think overall there's going to be a drive towards having things that have commonality globally, right? And people will talk less in their home currencies and more in digital currencies, and that will drive demand, as you mentioned, around institutions having to keep up with those people who are 15 now but will have serious money in 10 or 15 years' time. Yeah. You know, that's what I think will mean that our industry will just keep growing and growing. I don't really look at like it's 2-year bull market for 2-year bear market for Bitcoin, apparently the longest ever, but I don't really look at it that way. I think you know, when you look at it over a 10-year time frame, when you're looking back in 2030, it's going to kind of not seem meaningful.
Yeah, so gone are the baby boomers and start catering to TikTok fans. And Jonathan, I think Korea is actually quite an opaque market. So anytime a foreign institutional firm is trying to break through here, we've seen in previous cases that they've failed to, or like in Exchange's case, there's been a lot of pushback and knockback. I think from your perspective, what's the current market structure like in Korea, and can you talk to how you see that changing?
Sure. Korea is a really unique market. I mean, there's a lot of liquidity here, and rightly so, because you know it's the most internet connected with fast bandwidth, and you know people's familiarity with digital assets is no surprise. Excuse me. Now, the market structure here is dominated basically by the local players, primarily around crypto exchanges. So you got Upbeat, Bithum, Coin1, Gopax, and Corbit. And I think recently they're going to add Hanbitco to the list. And these players enjoy the privilege of, or they have the mandate to offer Korean won trading pair. And that's where the liquidity is in this business here. So if you look at the way foreign firms have tried to enter the Korean market without having that local connection and the relationship with the regulators and whatnot, it's a tough battle for them, right? So I think they've resorted to M&A, not because of choice, but that was the only way for them to have access to that liquidity.
Okay, thank you for that. And I think it's not a surprise that with such a large retail participant in the Korean market that institutions would want to follow as well and try and break through to this really appealing market. I think a question for all of you, in your opinion, what are the barriers that are in place to kind of prevent the adoption of institutional assets in an allocation to digital assets? So is there any particular kind of barriers that you see that institutions are facing currently? Manuel, we'll start with you.
Yeah, I can start. I'll go back to data, because we also ask our investors in our survey about that. And it's interesting. So, well, number one, which, I mean, we could spend a whole panel on it, so I won't spend too much time, is volatility, right? And I could give you a bunch of reasons why I think actually over the long term that stops being so much of an issue. But then there's a long list of questions that investors kind of quote. They're really bucketed into 3 groups, and all of them, I think, are things that, frankly, like the institutions on this panel are already starting to solve. So one is security, things like market manipulation, things like private key management, the sort of like nuts and bolts of operating in this market, which feels very different from traditional markets, and it's still much more primitive, right? So it's a valid concern, but it's something that we're certainly trying to help with at Fidelity Digital Assets, and there's other institutions trying to take some of that complexity away. Number 2 is, unsurprisingly, kind of regulatory certainty concerns. Again, as Raagulan was alluding to, I think that's relatively transitory, right? You can see MiCA in Europe, that's the final text already in place and is coming into place at sort of at the end of 2024. You can see it all across Asia, these sort of regulatory regimes popping up. And so hopefully that's another category that goes away. And then finally, it's the complexity of the asset that goes back to the demographics piece, right? Which is clients complain that, it's very complex and new. They don't know how to price it. There's no fundamentals. And we all know that that's not right. There are fundamentals and there are pricing models. They're just different pricing models. You can't simply just apply a discounted cash flow, although you can do that with Ether now. So it's things that I think go away eventually. And so I'm hoping to see the numbers, so we have percentage kind of concern numbers over those things. And we now have done this for enough years that we can kind of start observing trend lines. And I'm hoping that we see some of that starting to sort of tail off. So ask me again in a couple of years.
Some kind of like correlation metrics with that, and definitely cannot apply a DCF model to crypto tokenomics, no. And Raagulan, do you?
I think the biggest thing, you can talk about regulation and security, and all those things will sort themselves out. But I think the simplest thing is just a lack of FOMO. The whole crypto market cap is like $1 trillion right now. There is 6 US companies that are listed that are worth more than $1 trillion. So you've got 6 companies that are worth individually more than the whole of crypto. But it takes time. Like, we've started in 2009, the market cap's grown, it peaked around 2. Now, if it continues and in 10 years' time, we're looking at a market cap, closer to 10 trillion, then it's just like significance, right? Like, it becomes significant enough that it requires allocation in the portfolio, versus now you can sort of ignore it. And also, by the way, like, as the market cap of crypto increases, the volatility generally over the years has increased. Like, the swings may still be big, but overall they're decreasing, right? And so I think it's simply that. Like, it's just not significant. There's about $800 trillion in assets globally, 350 trillion just in equities, bonds, currencies, and crypto's 1. So it's not even 0.3% of the liquid assets, right? So once it becomes significant, it gets allocated. I think it's simple as that.
Yeah, right now I think like it's still such a nascent stage, and the industry at $1 trillion isn't going to really pique allocators' interest, but I think definitely once it starts growing, and there is that sense of FOMO that you get when your portfolio, a 1% Bitcoin allocation and then a 60-40 traditional equity to fixed income portfolio, and you see how much that actually changes the return on a risk-adjusted returns basis, you'll start to turn heads and you'll start to actually think, okay, maybe this warrants a bit more attention. And John, do you have any insight on barriers?
I think Maneul outlined it quite well, but just to add to his points, I think a lot of the institutions are managing other people's money, and they have a fiduciary duty to their job. And I think there is not a clear uniform accounting guideline or standards for the digital asset space. And I know it's being worked on right now at a global level with FASB. And just here locally in Korea, they're going to come out with a clear accounting standards in early 2024. So I think that could be one of the barriers that might hinder institutional participation.
Okay, thank you for that. And I think this one for Maneul. There's strong growth coming out of the UK and international business for Fidelity. Can you talk to how that's sustained and what the foreseeable future looks like?
Yeah. It's been a huge growth area for us. I think in general, Fidelity Digital Assets has been sort of a pretty fast-growing business anyway. The reason international has been sort of particular growth areas is kind of twofold. So one is, our kind of home market, international home market is Europe, and MiCA really has provided that regulatory coverage since the text kind of got adopted and passed by Parliament, that a lot of the European institutions needed in order to satisfy their client demand. And so you're kind of starting to see, there's a lot that doesn't necessarily transpire publicly, but behind closed doors, there's a lot of large financial institutions really putting together meaningful plans for crypto servicing, whether depending on what their main businesses are, right? It could be retail offering, but it could also be market making or custody or whatever it might be. And so that's driving a lot of our growth because we have to be able, those financial institutions are very different to service than sort of than a hedge fund, right? So, and it requires slightly different teams, it requires slightly different product and investment. So that's been one of the areas for growth. The other piece was really driven from, some of the debacles in 2022. We've had we had this model in market and this idea that disaggregation of trading and custody was a good idea. It's just that until 2022, not a lot of people cared about that idea, and so it's been obviously not great to see, but I think somebody was making the point earlier that I think after 2022 we're actually going to be better placed to do this right, and one of those things was people looking for third-party custodians that allow them to kind of keep their assets in the safety of sort of a qualified custodian and still being able to deploy that capital on venues or for margin loans or whatever it might be. So that's the other key driving factor for us is the fact that we could finally kind of use this product we've been trying to use for a couple of years and really seen huge amounts of demand coming our way.
Yeah, it seems like there's some real moat there for Fidelity.
Yeah.
Yeah, and dollar dominance has actually been really strong, and dollar milkshake theory is, countries like Argentina, Venezuela, Turkey, you're seeing huge dollar demand. In terms of circling USDC, which country are you seeing the biggest adoption in?
The process of inflation of the last few years has really trashed some currencies. And some have just devalued to the point of almost being like pointless. Their capital controls are crazy. I was in Argentina, and they've got this blue rate and their official rate, and they're so far apart, like 100% apart. And so people need stable currencies so they can trade, so they can live, so they can be secure in their assets. But the biggest problem that we see is that it's not trivial to open a US dollar bank account. Like for the majority of the world, like I can open one because I'm in Singapore and you're in Hong Kong. But if you live in an emerging market, whether that's in Latin America, whether that's in Africa, whether it's here in Asia, each one of these markets have at least 3 to 5 major economies. I'm not talking about small countries at sub-100 billion GDP. I'm talking like significant economies that don't have a stable currency, have currency that's devaluing more than 100% a year. And they can't go and open a US dollar bank account. And so for them, the ability to acquire USDC or digital dollars and just have a wallet and know that it's safe and secure, it's just transformational. It's huge for them, right? And currently there's tens of trillions of dollars in the world. And I think what we're enabling is this process of moving those dollars online to the blockchain so it can be moved between people almost instantaneously. So to answer your question, I think there's lots of markets, whether it's Turkey or whether it's in this region, whether it's Pakistan or Sri Lanka or Myanmar. But there's also just general demand to send dollars for trading. So the first one is like secure your dollars, but the second one is just movement of dollars for trading. I'm a trader who imports from China and I need to move money back, but it's really hard through a bank. It's much easier via the blockchain. So the global amount of digital dollars right now is just north of $100 billion, but the demand for this is well into the trillions. It's almost limitless. It's just the major thing that we have to overcome is the simplicity of getting wallets into people's hands, the user experience, but the actual demand for dollars compared to where we are is almost limitless.
Yeah, I definitely think like accessibility plays a huge part because, these developing countries are underbanked or unbanked, and being able to provide dollar access to them is such a pivotal point. I remember back when I was in Montenegro and Vitalik was speaking, he said people recognized him in Argentina more than down in Silicon Valley, and that was because Ethereum played such a huge part as well for these citizens that had to kind of spend their paycheck to paycheck because hyperinflation is such a big issue down there. And we, I guess, from the developed world, it's like we're privileged in the sense that we don't have to think about these things, but people from developing countries go through a much different financial landscape, and being able to cater to that is really important. Yeah. And John, I think in terms of hedge funds, allocators, like fund managers, as well as family offices, like who do you think will impact your business and impact growth in the foreseeable future?
I think two major parties, right? Like first will be, the hedge funds, because of their trading activity and the complexities of their strategies. I think a prime broker service is very well needed there. So I see that as the major growth driver, as the first. And so there's intricate services that are involved: financing, leverage, custody, and all the other miscellaneous services. So it'd be focused on that. The second party will be the asset management companies with deep pockets. Their trading activity is not as frequent as in hedge funds, but their size and I think they're just the type of money that they manage. I think they will be an important factor for the next growth.
Yeah, I think definitely. So hedge funds and asset managers on the top two lists there. In terms of specific regions or countries that are going to witness significant growth in the next few years, is there any that you're currently really bullish on? I mean, US, we've seen the SEC crackdown, and then a lot of interest has kind of come towards Asia, and Hong Kong, Singapore, they're kind of competing against each other. Japan, Web3 as well, they're making that a huge focus. Maybe Maneul, if you have any insight as to which country you think?
Yeah, I think that there'll probably be some segmentation, right? So I think the European market I'm very bullish on. Well, partly because I'm biased and I'm based there, right? But partly because of this new regulation, MiCA, which for those that are not aware, is basically a European level regulation, which means that you can access all 27 markets with one license, right? Which is called passporting. This concept of passporting, which is a very EU thing to do, and hadn't been done for crypto, even though it's been done since MiFID 1 and 2 for normal sort of securities. And so very bullish with what that brings, which is access to hundreds of millions of investors potentially. And I think that'll be pretty transformational also, because I think it will act a little bit like GDPR in the privacy space. I think this will act as kind of an anchor regulation for places like the UK, for other jurisdictions, eastwards of Europe as well, that might see that as a kind of model that they can then sort of lift and shift. So that's really the main one. But then obviously, in the wealth space, the Middle East is
Big, yeah.
far ahead, and there's some pretty interesting regulatory regimes. And as Raagulan mentioned, sort of Singapore and Hong Kong over here as well.
Okay, so mainly Europe, Middle East, Singapore, and Hong Kong for you. And Raagulan?
I actually take a different view. I think that those are the markets in which we're regulated. And I think of institutions coming into crypto as kind of upside down. And I'll tell you why. If institutions are there, but there's no real use case, and we've got only a couple of 100 million users, Facebook or Meta as a company has 3 billion users, you need to drive that mega demand, right? Before you can create the market cap, which creates the FOMO, which creates institutional trading, right? And so the regulated countries, are creating a way for crypto to have a regulated way to do this. But the magical combination to me is a country with a very big population, which you see in Asia, Indonesia, Vietnam, countries like this. A big population, love to trade globally, either digital goods or physical goods, exports, have a terrible banking system. Right? And you add to that, so it's really hard to move money, right? And you can add to that maybe a deflating currency or capital controls. Yeah. You got that mix of those 5 things, and I can tell you, crypto flies in those countries.
Yeah.
Right? And that's where I think the massive demand is going to be for crypto and stable coins. And that is where we're going to onboard users as we make it easier and easier for people. And if that does really well, then you create a lot more market cap, and then institutions have something to trade and for traditional buyers to come into. And that's the way I see it playing out.
All right, so APAC region. And John, quickly, which region?
Yeah, I think the more stringent the regulation, it's better for institutional participation. And the reason why I say that is because you have to work within the confines and the framework of the regulation, right, for institutions to actually actively participate. And just looking at Korea in the past, it's had its share of being stringent in terms of regulations. And the approach that they're taking is to be safe than sorry, right? So I'm bullish on Korea. I'm a little bit biased like Maneul, but I'm also very, I'm looking at Hong Kong in a new perspective because they've recently really changed their tone. And I think with, Hong Kong being the global financial hub, and there's a lot of dry powder there, once the institutional investors there move into this asset class, I think right now you could, under the SFC Type 1 and Type 9 license you can get in, there will be a lot of inflow into this space.
Thank you very much. And I think that's time. So thank you very much for joining the panel, everyone.
Thank you.
Thank you.